Hello, good morning, everyone. Welcome back to this channel. It's been about maybe 4 or 5 months since I last posted. I think maybe September last year, and well, life has been life since then. We thank God for life. At least we're here. But that's not the main purpose of this video. This video is to let you guys know that I'm back trading. I just got a 5,000 naira, $5,000 funded account from Fundednext, and this year my plan is to scale up from that account. Start from that's the bare minimum of I think Stellar Lights. I don't know. I can't remember the name of that particular project on Funded Next, right? But that's the minimum on that account or on that project. So $5,000 to $10,000, then I think $25,000, $50. That's how I plan to increase this year. So let's say this particular one I pass phase one, phase two, and I get funded. And after being funded, I get paid out. From the payout, I'll probably still get a $10,000 account if the profit is all right. I'm going to get a $10,000 account to the phase one, phase two, while still having my $5,000 account, right? Then phase one, phase two, if possible, probably I get funded. I'm going to from there get a $25,000 account, right? So that's my plan for this year, and from there we improve to whatever maximum funded, whatever we can get. But I don't plan on from jumping from 5k to 50k. No, I don't want to do that. So right, and must mind you guys, I've not traded in like 4 or 5 months since I blew that account. My analysis were all good, blah blah blah. But then I think when that account got to like 4,007, I just started losing my mind and just placing nonsense trade just to let the account go. So right now I got another one last Friday. Today is Monday, January 12th. So um, what it is now is I think sometime in around October, November last year, I started learning ICT again. I've always been an ICT trader. I never left ICT. Started learning again, but then I stopped again because I wasn't actively trading, and low key it was just like a lot. My laptop is ringing, that's why I'm looking down, just trying to see whatever I can see on this chat. But right now I'm just opening my laptop. Honestly, I've not even said I'm going to trade anything or even look at anything this weekend. In this journey also, we're going to be relearning ICT. We're going to start from the 2016 ICT course because that's like my favorite. When I started trading in 2019, in 2020 I discovered ICT, so that was the course I learned. Because I was one of his students when he had that inasecotrader.com, whatever. So that was the course I learned before he left it free on YouTube. So right now we're watching it for free on YouTube, but I'm going to be starting over again because of this YouTube page. I'm going to whatever I study, I'm going to try and share with you guys on how maybe I see the market should be like retracing, what's it called, expansion, consolidation, and reversal, going into the S&T divergence, going into liquidity sweep, going into other blocks and fair value gaps and all that. So I hope you guys enjoy this journey with me. I'm going to try to make videos every day, and it's not just only going to be about forex. It's going to be about my lifestyle. I have a fish farm that I started also in December, and I plan on um, building my garden at my dad's place. Planting good vegetables this year, planting onions and probably garlic if possible. All right, so those are my plans for this year, and I hope you guys enjoy the journey with me. So today we are going to start with I have my account on this phone, the $5,000 account. Oh boy, okay, it wasn't logged in before. Oh, I think my Wi-Fi is dead. I'm coming. It's dead. it's not dead. So it's just connected to the other Wi-Fi that's dead. So yeah, I'm going to what's going on here. Alright. So as you can see, I don't know if you guys can see that that's the funded account. I already picked the pairs I would be looking to trade. I don't know if you guys can see this. Let me see, yes. So if you can also see, I haven't traded at all on it. So I already picked about four pairs that I'm going to be trading. I think I'm going to add maybe UJ to it. I don't know yet, but I think I'm going to add one more pair to it. I'm going to be trading, and I'm probably also going to add BTC USD to it that I'm going to be trading. So we'll see how that one works out. So the first thing we're going to do today, I think I'm going to log in this. I'm going to log it in on my tab. I'm filming from my main phone. This one is just like, see, the screen is not that good. So I'm going to log it on this phone. I'm going to be getting rid of it soon. So I'm going to most likely be using my tab to execute trade and all. Then just going to probably study. I don't just want to jump on the charts because it's been about 4 months. Although I know once you look at the charts, you see what is there and what is not there. So I'm still going to look at it, but at the same time, I don't want to start this journey by just looking at it. I also want to I have some jottings from I think month one of the 2016 course, ICT course. So we're going to start with that. And I think I'm talking too much. So let's just get right into the video, right? Alright guys, so this whole week we are going to try as much as possible, God willing, to learn the core content of ICT 2016 course and slash 2017 course, right? So the first one we're going to be starting is the first video on elements of a trade setup. I already learned this whole thing like more than 10 times over the last 5, 6 years. Sorry, 6 to 7 years that I've been trading on and off. I've never for a full year traded throughout. It's impossible. I probably just trade like 2 months or 3 months, go away, maybe for another 3, 4 months, come back again. So it hasn't actually made me like a full-time trader because 1 minute I'm there making money, the next minute I'm blowing the account, go away for a few weeks or months again, then come back. In fact, there was a particular time I didn't trade for like a whole year. I think between I think July 2022, July 2022 to like May 2022 again. Then I came back, got a funded account again, and I lost it. But this year I'm trying to be focused. I'm trying to be serious. Actually, it's not my fault. I have other businesses that I run, so everything wants to take time, right? You want to take your time, but we don't allow that. So let's just go back into the video. So the first one we are going to be talking about is elements to a trade setup. Like I said, before we go into the actual charts, we need to actually know what we're actually doing, right? So firstly, we need to understand the context or framework surrounding the idea of a trade setup. Like when you go into the chart, what is the thing that you're actually looking for yourself? I'm going to try as much as possible while editing this video to, list some things here, show some pictures or whatever. I'm going to try and do that. So, like I said, elements to a trade setup. What are the things that we're actually looking for when we are going into the chart? First thing we want to see is, okay, where is the market? What is the market currently doing? Is the market expanding? Is it consolidating? Is it retracing? Or is it in a reversal? Those are the four main things that make up a trade setup, right? Those are the four things that are going to help us look at, all right, what type of trade are we taking? Are we taking a long or are we taking a short, right? Once again, expansion, consolidation, retracement, and reversal in no particular order. But one thing you always have to know is that the market starts from consolidation. Before it expands, then, once again, we're still going to go into the chart to show what consolidation, what expansion, or whatsoever, what it looks like, right? Or expansion and retracement. So we're going to go into the chart to see what it looks like because I'm currently looking at the GBP USD weekly time frame here, and I can see an example of consolidation, expansion, retracement, and reversal. I can see all that right now, but I just want to quickly talk to you guys about this. So Consolidation is when the market is like ranging, right? It's in a particular frame. So it's like going up, down, building liquidity at the top and also at the bottom, right? So when it does this, we don't actually want to be in the market, except maybe we are looking at the very low time frame to pick quick scalps and all of that, right? So when it's in the consolidation, we don't want to be in the market. And once again, except we're in a very low time frame whereby there is no consolidation on a low time frame, you're seeing structures, market structures and all of that. That's when you want to be taking trades. But at the same time, I really don't advise lower time frame trades. And by lower time frame trades, I mean like 1 minute time frame, because I still trade 5 minutes and 15 minute time frame back when I used to trade very well, right? So um, when the market is in consolidation, it builds liquidity at the top and at the bottom, right? So we wait for the market to show us what it wants to do. So from consolidation, the next stage is expansion. We want to see the market expand either to the top or to the bottom of the range. It might expand upwards, it might expand downwards. We don't know. But when it expands, what we want to be looking for is, all right, after expanding now, what are you doing? Are you continuing? Are you reversing? Or you're retracing to continue? Right? So we want to know if it expands upwards from the consolidation, if it expands upwards, we want to look for, okay, is there another block left in this expansion? Is there a fair value gap left in this expansion? Is there a liquidity void left in this expansion? Is there a sell side liquidity left in this expansion that we can, okay, we'll see markets want to come into that area and then continue from there. That is, retrace back into the fair value gap or the block or sell side liquidity before continue back. Or if that doesn't happen, then we may be looking at maybe a reversal. Do you understand? And sometimes you may not get a reversal. Do you understand? Instead of retracement, you get a reversal. Sometimes instead of reversal, you get a retracement. So this whole thing, they work hand in hand. When you go into the market, if the market is not in a consolidation, you see it's in an expansion. Okay, what's up? Let's wait for a retracement right before we enter. And then when you see that, okay, it has already expanded, it's already retracing. All right, where are the areas whereby we are looking to take an entry? You look at that also, you take the entry, right? Either long or short. If it expands downward from the consolidation, then you're looking for buy side liquidity around the top or other blocks. That's going to be a very shorter block to enter from, or fair value gaps to enter from. That's sell side imbalance, buy side, whatever. The CBDC, whatever. You take the trade. Right. So these are the four main things that we're looking at. And you could see I already mentioned reference points in institutional order flow. I already mentioned the other block. I already mentioned the fair value gaps and liquidity voids. I already mentioned liquidity pools or stop runs. Those are the buy side liquidity or the sell side liquidity. Then also we have the equilibrium. The equilibrium of the range is the from the bottom of that consolidation. If it's a long expansion, we have the bottom of the consolidation to the high, right? Then we look for the equilibrium. What do we have at the equilibrium? Do you have a fair value gap? Do you have another block, or do you have a stop run or liquidity pool right there? So those are the things that we actually need to look at. Now, why do we actually need the consolidation? I already explained the importance of the consolidation, but I'm going to quickly go to that. So consolidation is when price moves inside a clean trading range. That is, it's going up and down, up and down, up and down, up and down like this, right? It is not giving us an entry to go up. It's not giving us an exit, an entry to go down, right? So it keeps on building liquidity up and down, up and down. It's stuck in a range. It's stuck. Let's say something is stuck in this. I'm going to try and show you a picture of what consolidation looks like. I am going to try. I'm not promising, right? So we have the importance of the consolidation. When price consolidates, it indicates the market makers are allowing others to build on both sides of the market. Expect a new expansion long term. Now, it depends on the time frame whereby you are trading. Sometimes consolidation on the higher time frame can take days, it can take months. But on the lower time frame, we tend to get like entries, right? So What do we look for in price when price is in consolidation, right? The impulse swings in price away from the equilibrium level that is found exactly in the halfway point of the consolidation range. So let's say we're in like a range, we want to see like an expansion from the midpoint of that consolidation, right? How market expanded from there, how it's left from that place. We want to take note of that. If there's another block there, we probably want to be looking for an entry from that other block when price retraces, right? So expansions now. Expansion is when price moves quickly from the level of equilibrium, from the equilibrium level of the range. How do we want to see price move from there? So we always expect expansion from the equilibrium of the range, right? So price forms a range. Did you pick your Fibonacci retracement tool up and bottom, have the 50% of it. From that 50%, you want to see how price moved from there. You understand how it expanded downwards or upwards, right? That is expansion. Then importance of an expansion. When price leaves a level quickly, this indicates a willingness on the part of the market makers to review their intended repricing models. So when the market leaves that consolidation, right, it moves quickly. The market makers are trying to show us that, all right, we are leaving this particular area, we are done here. So they either run up to take liquidity, then reverse down, or they run up down to take liquidity and reverse up, or they just run up. They leave liquidity down and just run up and retrace and then continue. Or they run down, retrace, do you understand? So like anything above the 50%, right? You look for the other block once again, then they continue downwards. Do you understand? So what is the importance, or what do we look for in price? The other block the market maker leaves at or near the equilibrium. I think I just spoke on that. So now we're talking about retracement, right? That's number 3. Retracement is when price moves inside the recently created price range. So when price expands, retracement is when price comes back into that range, right? When we are looking for the 50% of that range, when we are looking for the fair value gap of that range, when we are looking for um, the liquidity pools in that range, the stop runs in that range, when we are looking for the other blocks in that range, that is what retracement is about. Retracement is going to come and look for something before continuing back up or down, right? So what is the importance of this retracement? When price returns into a recent price range, this indicates a willingness on the part of the market makers to reprice to levels not efficiently traded for fair value, right? So we look for fair value at other blocks, we look for fair value inside fair value gaps, like not efficiently traded, like price quickly moving away from there. And then we look for fair value in liquidity pool. Do you understand? Those liquidity pools, it is not external range liquidity. I'm already jumping, right? It is not external range liquidity. I like those liquidity pools paired with fair value gaps or other blocks, right? For us to be able to take an entry from. So yes, what do we look for in price? We look for fair value gap and liquidity voids, right? So reversal now. Number 4 is reversal. This is the final thing we're going to be talking about the elements of a trade setup in this video before I actually go into the chart and like show you guys, okay, this is what consolidation look like. I'm making this video for learners, and at the same time I'm also relearning. Yes, sir, you guys are pros. You just click and you know, move on from there. But I'm going to also try and make a video tomorrow and the day after, teaching ourselves, beginners, on how to trade or go about ICT, right? So what is reversal? Reversal is when price moves the opposite direction of where the current direction has taken. So like I said earlier, if we leave a consolidation and we expand upwards, right? If price comes back down the entire range and below the consolidation range, that is reversal. Do you understand? That is reversal. His price said, all right, I just came up here to take liquidity pool. I'm out. Do you understand? Or price consolidate, expands downwards, takes the liquidity of the sell side range, and then back up. That is reversal. So what is the importance of reversal? When price reverse direction, it indicates the market makers have run a stop, a level of stop, and a significant move should unfold in the new direction. So significant move should unfold in the new direction, right? Like I said, they've run a level of stops, either the buy side or the sell side of the consolidation through the expansion, and then they are out. Like, so what do we look for in price? We look for liquidity pool just above an old price high and below an old price low. So we're looking for areas of liquidity, external range liquidities, do you understand? Just above an old high or below an old low. So guys, that's just basically what um, the element of a trade setup video about month one on ICT is about. So right now I'm just going to go into the chat and on my own basic knowledge, like show you guys what this whole thing is all about. So guys, I have a very good example on the Euro USD weekly time frame from the last 3 years. I think between this is July 2020, September 2022, okay, to this date, which is as you can see down there, 12th of January, right? So please mind you, my chart is on the what's it called, New York time. It's on New York time, hence why the time there is 5 a.m. We're actually 6 hours ahead of New York right now. But just to follow, like I said, I trade ICT like crazy. Like I like ICT standards. It just goes with my personality one way or the other. So first thing we are going to be starting with in what we just learned is the consolidation, right? Where's gotten everything about. Yes. So start from, if you can look here, between here and here, right? We're like in a range. Let me pick the high and the low. In fact, let me pick it up onto here. Alright. This is what consolidation looks like. It's like we keep going up and down, nothing is happening, we're not leaving. Then I'm not like people who accuse my mentor of doing. I'm not cherry picking, right? I was looking at GU before, but I was like, okay, GU wasn't giving me the exact. Let me show you guys the GU. You can see GU. It's like also in like a range, right? But from here down to like, yeah, I don't know. But it's not giving me the exact thing I wanted to show you guys as like an example of something you can find in like your day-to-day chart, right? So we're in the consolidation right here, right? And then we have an expansion out of the consolidation, right? We had an expansion out of the consolidation. If you can see, I don't want to jump, but if you can see, that expansion came into a fair value gap in another expansion that has another liquidity pool. This sell side liquidity right here. It took that sell side liquidity after running this guy, traded into that fair value gap, which also has this other block, right? Which also has this other block, and then reversed. This is an expansion, right? This is a reversal, not a retracement. From this range, right? From this range, we expanded. If I even pick my fib, where is that fib? Where do we pick fibs from? Okay, this is it, right? In fact, I have them in like favorites. Yes, I have them down here. I have them down here, so I'm probably just going to be picking from there. So if we pick the fib from this low, right, to this high, right here. So you can see there's an other block right here that they explained to us, right? ICT explained to us. At the 50%, there should be another block or a fair value gap, right? There should be another block or a fair value gap. So we have this. On this time frame, you can see we ran down here. We took liquidity, right, through this expansion. I'm going to read that expansion again. When price leaves a level quickly, what is the importance of expansion? When price leaves a level quickly, this indicates a willingness on the part of the market makers to review their intended repricing model, right? That, and then what do we look for in price? We look for the order block the market leaves at or near the equilibrium, and 50% here is at, our order block here is at or near the equilibrium, right? Now, if we go into reversals, right, we're also going to see it says reversal is when price moves the opposite direction of where the current direction has taken it, right? And what is the importance? When price reverses direction, it indicates the market makers have run a level of stops and the significant move should unfold in the near direction. What do we look for in price? The liquidity pool just above and below and just the liquidity pool just above an old price high and below an old price low. Right. So what we have here, this this right here is our liquidity pool, right? Traded down there and also took this liquidity pool just here, took it also and then reversed upside. And this happened in January 2025. This happened in January 2025. So that is, in fact, in just one example here, we already have what we're looking for. Let me see if the same thing happened in DXY. So the same thing happened in DXY. You know, they are closely correlated, right? So we have our range here. Let me pick it from here. We have our range high and low, right? So we can see this consolidation. We have the expansion to the upside, which ran this liquidity pool traded into this fair value gap right here, and then a reversal, and then a reversal. So today we have traded and we have shown an example on consolidation, expansion around liquidity pools, do you understand? Then reversals that actually took these highs, do you understand, traded into this fair value gap, and then this is an example of a bearish reversal, and this is an example of a bullish. The one on EU is an example of a bullish reversal. My Wi-Fi is going off. Oh, I don't know what's happening. So guys, I'll see you guys on the next one. So what I'm going to do right now is I'm going to go into the chart properly. I'm going to do my market analysis. It's a funded account I bought, so one way or the other, I need to start trading with whatever knowledge I've had before and make sure I'm careful not to blow the account. Right. So I'll see you in the next clip then.
Alright, guys, so it's been about an hour since I made the last clip, and since then, I've actually been trying to arrange what to eat and all. But um, I took a couple of trades on the new accounts, and right now they are in the negatives, right? So I'm just going to quickly show you guys. So what happened was let me just repeat. So what happened was I was marking up my EU charts, right? I was marking up my EU charts just right from that consolidation I showed you guys, right? That consolidation, then we had the stop run into this fair value gap on the monthly time frame. This is monthly time frame. You know, the other one we are looking at the other time was weekly, and the weekly had the sell side liquidity somewhere here with the fair value gap. So, but on the monthly, it only shows a fair value gap, which is also still valid and also still slams the order block. All right. Then I term this as reaccumulation down here after accumulating all the liquidity here at this bottom of the consolidation and at the fair value gap. Then it expanded to the upside, and as you can see, it left us two fair value gaps on its way up, right? So, and after putting my Fibonacci from year to year, I noticed that this is just right at the 50% and this is way below the 50%. So personally, I'll be expecting a retracement into this fair value gap or this fair value gap, or most likely both, then a push up. But if we're going to come into this one, I'll expect it just to be a week on this monthly time frame, right? So after saying that, I went to the daily time frame. Then on the daily time frame, I realized that okay, sorry about that. It's because I'm holding my camera. Oh, let me try and zoom in a little bit more. Yeah, I think that's okay. So if you see on the monthly time frame, I mean on the daily time frame, right? You see that we have something like a long-term high here. It has a short-term high and a short-term high, and here it has like an intermediate term high and another short-term high forming here. But what I can also see as well is in this particular range here, you can see there's a fair value gap here that has been disrespected, right? A fair value gap that has been disrespected and has been traded just almost below, right? There's no liquidity there for me to say, okay, yeah, it was just a tap, and although there's a liquidity here, right? But I saw this here, trade down, trade through it, just like a stop hunt, right? Then a breaker formed right here, right? A breaker formed right. Then I think I went to the 1 hour. Yes. Then I went to the 1 hour and I looked. I'm going to show you guys. Oh my god, I'm not using my mic. Sorry, I just came back and I just set it up since I took this trade about maybe 10 minutes ago there about. You can see since I entered it has just been going to SL, but then I'm just going to show you guys. So accountability, right? Then I looked at it, right? I was like, I saw this break of structure here, right? Then sweep of internal range liquidity, break of structure right here, right? Broke structure here, it went down, then we're coming back inside again. We have taken what was it called? Internal range liquidity, internal range liquidity, internal range liquidity. Then this particular one here, this liquidity here, some people call it buy side liquidity, some people call it inducement, and this other block right here. So I wasn't there when this other block was hit, right? So I just came to the 5 minutes again and I looked for an entry. I realized that okay, the entry that I could have gotten was going to be here, right? Using this fair value gap and all, but it wasn't tapped and the market was already here. So I FOMO in and I entered just right here, and as you can see, since I entered, just came just a tiny bit in profit just down here, and then it has been going to SL. But I'm going to be holding the trade. I'm only risking 0.5% of the account on EU. Then I took a similar trade also on GBP USD, and as you can see, that one is really running riots. So this one I risked half, right? I risked 0.25%. So let me show you what's currently like on there. See, this is what the account is currently doing. That's down 16 USD. If both trades hit SL, then I'm probably just going to be down maybe about $30 thereabouts, and that's just about 0.3% that we would hopefully make back if we get another winning trade. If we get a winning trade, not another winning trade. So guys, this seems to be how today is going to be going. I'm just going to come back and show you guys, all right, this is what the trade has done, this is what the trade has not done, and hopefully going into I think we just entered New York session, right? So going in there and we'll see what today has for us. Hey guys, let me explain this camera. All right, so I think it's better now. So guys, yesterday was the last clip that you saw. It's a new day today. Both trades I took ran into losses. Funny enough, I haven't even looked at them. I wasn't really available. Positions, oh, last week. All right, so these were the trades I took yesterday. They were minus about $40, right? Yeah, about $40 and all. So today I'm looking at this is what I'm looking at, and we have this trade that I'm looking at on GU. Probably when I get back later, I'm going to explain why my yesterday's trade was wrong, and also I have a similar looking trade I'm looking for on EU. So GU is kind of what I'm mostly looking at. What I'm mostly looking at though, because I'm not jumping into the trade. Just going to continue the trade on my laptop because I'm sorry. I'm not going to continue trade on my laptop. I'm going to continue on my tab over there. So I'm not going to enter this trade right now. I'm going to wait for it to tap in there. If there's going to be a break of structure back to the downside, then I'm just going to look for a fair value gap and just take the trade and look for a 1 to 3, right? And the same thing I'm looking at actually here. The reason why I'm not jumping into that is because I'm still expecting EU to come up to this high. So when that happens, I just probably look for shift change break of structure to the downside and then enter a short on GU. I'm going to do a proper explanation when I'm able to sit down and relax, and I'll get back to you guys on how that goes. All right. So good morning, guys. It's the following day. I couldn't give an update yesterday because I got a little bit busy and not busy. I wasn't just in that mood for work, but I had something set already. I think yesterday I mentioned, I've not even watched the video to even see if I mentioned that I was looking at this. Where's my mouse? Sorry. I'm not even using my mic. Let me plug in the mic. My mic is dead. I don't know if that last part was actually took my sound, but what I was looking at on the chart was once it hits that entry, I'll look for a shift in market structure to the downside, right? Look for a fair value gap in that shift and then take a trade from that fair value gap. But since yesterday, as you can see, this is GBP USD. After it hits that initial entry that I said I wasn't going to take a trade from, we shifted market structure here and we left this fair value gap. And as you can see, since yesterday, I've been waiting. I've not taken any trade. I'm going to show you guys the MT5 soon. I set that trade since yesterday, and okay, I think Euro USD is about to come. So this one didn't come here, right? But it swept this high, right? And then shifting market structure, it swept this high right here. Shifting market structure, we have a breaker right here. So this fair value gap, there's a fair value gap here, there's an inverted fair value gap here. If I was going to actually use a proper stop loss, I'm supposed to just put it here, but then I prefer this high as my stop loss and take my 1 to 3. So we're about to get tagged on Euro USD. Let me see if GBP USD. Okay, GBP USD also is doing the same thing. I would delete this one since we didn't get into that trade. I just wanted to leave it to show you guys. All right, this is what I was working on since yesterday, why I didn't take trade and all of that. So let me show you guys my MT5. So this is the MT5. As you can see, I already set the trade since yesterday. Where's the time? Yes, yesterday's date was 13th, right? And as you can see, the first one also I set it since yesterday, 13th. So today being 14th, you can look at it. Today is 14th. Since that trade since I said the trade since around, let's say that was around 4 p.m. I think Nigerian time. MT5 I think is 1 hour ahead or so. I don't know. But we're about to get tagged. Hopefully we get tagged and not just reverse from the current points which they are in. So when the trade gets tagged, I'll give you guys an update. I have one or two things to do this morning at home. So see you guys then. Update on the trade, guys. The Euro USD trade has been tagged, and it was tagged like I think some 5 minutes ago. Went a little bit in profit, then started going back into SL. GBP USD, that one is yet to be tagged, still playing around. I said I was going to remove this guy. Let me remove that since I was never in that trade. And Euro USD, let me remove this guy too. Alright, so let's see how the trade pans out. And wish me luck, guys. Also I wanted to mention something. Alright, yes, so what actually made me confirm that the trade was probably like solid is on Euro USD, for example. As you can see, the whole of Monday going into Tuesday London was consolidation, right? Like it was just like in a consolidation. It was ranging, then it expanded, fell into another consolidation. To me, low key, this is forming a sell model. Do you understand? Like, although I said we are starting ICT together, but like I can't but speak on some knowledge that I already hold on ICT. And as you can see, we had some little bit of consolidation here. We had a turtle soup here and a break of structure, whatever, downwards. We had this what's it called? This fair value gap traded into with this week. If not that I already made a loss on this trade that day, I think I saw this happen, I would have probably taken it and been part of, I would have gotten my 1 to 3 risk reward by now, I think. Then you can see also that range. We had this two-way turtle soup. I think that's called the Judas swing. That happened in New York, right? We traded this range. We traded down here, went up. That was like a form of reversal. Took the buy side liquidity just after taking the sell side. Took the buy side liquidity, then reversed again. Do you understand? Then we reversed again. Then we fell into some sort of consolidation. Hence why I said, if this trade up into this fair value gap, inverted fair value gap and the fair value gap, I expect it to just be like a raid of buy side liquidity in this consolidation. This is consolidation, right? And inside that consolidation also we have the Asian range. Then we probably fill up the fair value gap and then continue downwards. That's what I expect on Euro USD. And also for GBP USD, I have this Asian range, this consolidation right here, right? Then you can see New York yesterday we had this this turtle soup of the top of the range. That's the buy side. We had our Asian range here. You see, we swept that, then we fell again. We fell into some kind of range here, right? Then the Asian range was kind of like a trendy one way or the other. So either ways, I'm just expecting price to trade into this fair value gap that formed in New York yesterday and then down from there. My honest opinion on the markets, as you can see, based on what's on Monday, I'm still following the consolidation, retracement, expansion, and reversal. That's what I'm still following. Update on the trade, guys. So currently the trade is about 10 pips in profit, just about 10 pips in profit. I think the profit target is I think 50 pips, right, on the 1:3. So, or maybe 53 pips, I don't even know. But it's a 1 to 3 trade, right? And the GBP USB ended up not tagging me in, so it's fine. I was actually looking at this inverted fair value gap here before. I marked it out before this happened. So I was looking at it that, okay, once we break here, probably break this low also, probably be looking for markets to come in here. That I was not able to see this fair value gap, right? I wasn't looking at that time, I think. So although this is the 5 minutes, I'm mostly on 15 minutes, right? So Yeah, I missed this fair value gap here, right? So I don't want to push too much trades, right? I don't want to over trade and all of that. So you see, this is what we have currently. We're just about 0.2, 0.3% down in drawdown. Oh, sorry, what am I saying? Yeah, let's just say 0.5% in drawdown and see. This is what we've had. These were the first two trades we took on the account on Monday, and that has been it since then. No, that has been deleted. As you can see, no, that has been deleted. That's just everything that we've had since then. So let's keep going, guys. Let's keep going.
We commit his wife and the children. The Lord, you continue to keep them in the name of Jesus. That this person will not bring evil to the family in the name of Jesus. Your word has taught us that you, O God, you are the defender of the widows.
What's up, guys? It's been, I can't remember around the time I made the last clip, right? But it's been a couple of hours since then. And yeah, I think the market is actually in our favor right now. I'm trying to turn on my laptop and trading view on my tab, but I don't know how bad the network is right now. The chart is not loading. So still not loading. But what I can see on my other phone, my phone is also updating over there. What I can see here is that I was just looking at gold earlier. You can see we're kind of GBP USD got tagged in from our entry down that we planned, and we're $53 on today and $12 over up on the $5,000 account. So maybe when my tab or laptop connects, I'll give you guys like a full breakdown of how the trade is going. But the Nigerian match is going to start in 30 minutes. So yeah, hopefully Nigeria wins Morocco.
Hey, what's up, guys? So today is Sunday, and it's been quite a week. I've not been able to like make videos the way I want to, and just been here and there. But I've taken a number of trades this week. I think this week took about a total of 5 trades. At the beginning of the week, you guys saw the video. We lost 2 trades, one on GBP USD and one on Euro USD. And then later on, I took another GBP USD trade and a Euro USD trade. And the Euro USD has hit take profit. And I was able to take another Euro USD trade, which is actually running in profit just before the market closed on Friday. And the GBP USGP is just over 70 pips in profit. I think maybe 30 more pips to eat. I think less than 30, maybe just about 20 something to eat take profit. So right now I'm just going to go over the trade overview for both Euro USD and GBP USD on the trades that I took, and also the strategy or the lesson I taught so far this week or this in this video was practically what guided my trades this week. And let me show you. So let me put my mouse in. Right. So right now, as you can see here, we have this was the first trade I took on Euro USD, and as you can see, it's the stop loss then started going down. But I'm not going to go into like full analysis or whatever just yet, but because I think I already mentioned it in this video earlier. I'm just going to join everything because I'm trying to make sure this video goes live tonight or tomorrow morning. So I'm just going to go about editing it and all. So as you can see, we spoke about consolidation, expansion, retracement, and reversals. So what I've been working with this week majorly has just been consolidation. Then we have liquidity sweep, and then the market goes down because my bias is currently bearish for a little bit. Right, then we have another consolidation here, liquidity sweep, and then down. So as you can see here, this was Monday, right? This was when I took the first trade, and then the that day was just kind of like choppy. I can't remember what happened. I didn't check the economic calendar or whatever. So we have this here from Monday to like after London on Tuesday. It was just kind of in a range and all of that. So I marked that range. And what I was expecting was, all right, market should come to this place, take this liquidity, and then when we have like a break of structure, I'm going to take that trade. But it didn't. Euro USD didn't come this high. So when I said that okay, it didn't, and GBP USD already got to where I wanted it to get to and broke down, and I saw that okay, we had already swept here on Euro USD, and we had broken down here, and we formed a fair value gap if with an inverted fair value gap, right? What's going on? Yes, so this one here. So I set my trade here. I was expecting that in New York I would get the entry and all, but fortunately I didn't get that entry until the following day, right? But still, as you can see, just while I was expecting that entry, the market was in a consolidation, and when we had this, it just tagged me in and then went straight to take profit. That's following the following day, rather that was on Wednesday. Then on that Wednesday also, I noticed this reversal. I was expecting. I think on the 1 hour, the fair value gap is more visible. So I noticed this. What was it called there? Let me adjust this. Yeah. So on the 1 hour, I noticed this liquidity void right here, right? So I was just looking at, all right, whatever happens, we get in the trade and all of that. So I think maybe I even picked the trade up like from a four. Give me a minute, please. I think yes, I was looking at okay, this fair value gap getting filled, and then maybe it was a 5 minutes. I knew I saw some kind of liquidity that needed tapping. Yes, so this was it here. This was what I saw here, and I believe that this fair value gap right here. You see, I put my high, my my SL at the top of the range here because I was looking at some break of structure, something higher low break of structure, all of that. So I didn't expect the markets to go this high if we are still bearish. Whatever made it break this high, that means we are shifting buyers, right? So I just set that trade just after New York on Friday, and in fact, I think it didn't eat, so I just left the chart. I wasn't looking at the chart, so I just went. Then before I knew it, I came back and I realized I was like already 30 pips in profit. I was like, what? I didn't even know what was going on with that and all, but it was really nice. So far this is the trade. We've not hit TP. As you can see, the market is frozen. This is just before Asia session opens. So let's quickly go through GBP USD. Uh, let me see. Let's see the 15 minutes. All right. So on GBP USD, I've only taken these two trades so far. So this was the one I paired with that one on I think what is it called Euro USD, right? So you can see both trades like sniper entries. So we had this Asian session here, but it has a consolidation from Monday going into Tuesday, just like the other one. As you can see, we had this week here, just like Euro USD gave, right? And then pure, we swept that. I was waiting for this um, fair value gap right here with inverted fair value gap also, right? So I took the trade, I also set it and all of that. And the following day, as you can also see, it got it. And this was so close to TP. I didn't know when this happened. I think I go back on the chart just maybe somewhere here. I don't even remember. And then as you can see again, almost 8 TP. I'm still in the trade. I'm going to show you guys the MT5 shortly. So as you can see, I just keep marking my consolidations. And here again, you can see that after that consolidation, we had a trade up. We took another fair value gap and then started going down again. So it's like currently what the market is doing is like a Judah swing, right? Where we consolidate, we take liquidity up top, that is, it forms like a fake out, or what do they call it? Fake breakout, false breakout, right? Whereby it makes the market, people participating in the market feel like, oh, the market has broken out and all of that, and then just takes everybody's stop loss by going the other way around. So ICT calls it the Judas swing thereabout. I think that's what it is. It's not just even the turtle soup. This particular one I just showed you guys, right, is what they call a Judas swing, I think. So yeah, that was the trade for this week. So 2 GBP USD trades and three Euro USD trades. 1 Euro USD trade already hits SL, another one already hits TP. 1 GBP USD trade already hits SL, the other one is still running, and the last Euro USD trade is still running. So that's what that is about this week, guys. Let me see 5. Yes, so currently this is what we have. As you can see, those are the only 2 trades I have. Then you can see they're both running to TP. The current swaps on them. Okay, Euro USD doesn't have much. GBP USD 1.49. Yes, something also happened the other day. See, my phone is like screen messes up sometimes. So I think as I opened one of my GBP, as I opened the chart on GBP USD, so this stuff here was kind of on, right? That was I just this part of the screen just started touching itself, and then picked these 3 trades. As you can see, for transparency reasons, I like under 10 seconds or under 15 seconds, I closed the trade back like, what? Why was it just picking sell orders and all? See, this one was 10 seconds, under 10 seconds I did. This one was like under 20 seconds. So these 3 are hero trades. I didn't take them. Those were the 2 SL this week, and one take profit already hit. This is what the account is on right now. Current balance is 5,004. That means we are up on the account. Then equity is 5,112. Over let me see, I think that's over over 2%. I think so, over 2%. But by the time both trades are done, I think we should be about 3% off, and looking to what am I gonna call it? 5 more percent, right? So that's where it's at right now. I don't know. I think I took trades on maybe just 2 or 3 days this week. So that's just 3 trading days. So we still have 2 trading days left on this account, and hopefully when the market opens tonight, it's take profit. And also next week is going to be kind of different on this channel. I think I'm going to be making separate videos on the tutorial on ICT lessons and all of that, and then another separate video on like the day or weekly vlog, whatever. So I hope you guys enjoyed this video. If you did, kindly like, subscribe, and share. I just want to end this video. I don't know, for the 10 or 15 people that are going to be watching this, I hope you enjoyed it. And have a good week, guys.